Most people think banks are afraid of people who are broke, but that is not really true. Broke people still borrow, they still swipe, they still pay fees, they still live inside the system exactly the way the system expects. The person who quietly saves $10,000 is different. Not rich, not free, not untouchable, but different. Because something changes in a man when he has a small pile of money sitting there, untouched. He stops panicking at every bill. He stops saying yes just because he is desperate. He starts reading the fine print. He starts asking, do I actually need this? And that question is dangerous, because a person with no savings can be pushed. A person with $10,000 can pause. And that pause is where power begins. Maybe you have felt this before. The moment you saved a little money, you did not become wealthy, but you became harder to control. Today, we are going to talk about why $10,000 is not just a number in a bank account. It is a line, a quiet line between reacting to life and finally having room to think. The first thing $10,000 gives you is not luxury. It gives you breathing room. And breathing room is something most people underestimate until they have lived without it for long enough. When you are one emergency away from putting groceries on a credit card, every decision feels smaller than it really is. You do not compare options. You do not negotiate. You do not wait for a better price. You just survive the next bill, the next repair, the next phone call, the next due date. And that is where banks make a quiet kind of money. Not always from one huge mistake, but from millions of tired little decisions made under pressure. A late fee here, an overdraft there, a balance carried for one more month, a cash advance because the car would not start, a personal loan because the roof leaked at the worst possible time. None of those things feel dramatic when they happen. They feel normal. They feel like life. But over years, that kind of normal becomes expensive. $10,000 interrupts that cycle. It does not make you rich enough to ignore money, but it makes you calm enough to look at money clearly. And that is a very different person than the one the system is built around. Because the whole machine works best when you are always slightly behind, not completely destroyed, just behind enough to need help, behind enough to accept a bad rate, behind enough to keep the card open, behind enough to refinance something you should have been done paying for years ago, behind enough to treat debt like a bridge instead of a warning sign. And if you are over 40, you probably know what I mean. You have watched life get more expensive in slow motion. You have seen a normal grocery run turn into something that makes you check the receipt twice. You have seen insurance rise, property taxes rise, medical costs rise, repairs rise, and somehow the paycheck still seems to walk into the house already tired. So when someone finally saves $10,000, it is not just money sitting there. It is resistance, quiet resistance. It means the next emergency does not automatically become a bank product. The next inconvenience does not automatically become interest. The next mistake does not automatically become a monthly payment. And banks understand this better than most people do. They know that a customer with no cushion is easier to monetize. That person needs short-term relief. That person needs convenience. That person needs approval. But a person with $10,000 saved has something banks cannot sell them as easily. Time. Time to compare. Time to say no. Time to walk away. Time to fix the problem without turning it into a 5-year repayment plan. That may sound simple, but in personal finance, simple things are often the most powerful. $1,000 might save you from one bad week. $10,000 can save you from becoming someone else's long-term income stream. And here's the part people do not like to admit. A lot of financial products are not designed around your best day. They are designed around your worst day. The day your water heater breaks. The day the transmission goes out. The day your kid needs help. The day your hours get cut. The day a medical bill arrives with numbers that do not feel real. That is when the offers appear comforting. Low monthly payment. Fast approval. No money down. Skip this month. They do not sound dangerous when you are stressed. They sound like relief. And sometimes they are necessary. I am not saying debt is always evil. Life is more complicated than that. But there is a difference between using debt as a tool and being cornered into debt because you had no room to move. $10,000 gives you room to move. It gives you a small private doorway out of panic. And once you experience that doorway, it is hard to go back to living completely exposed. You begin to notice things. You notice how many subscriptions you kept only because canceling them felt like too much effort. You notice how often convenience was really exhaustion wearing a nice shirt. You notice how many purchases were not about need, but about trying to feel caught up, respected, normal, successful. Okay. And that is when your relationship with the bank begins to change. You still use the bank. You still deposit money. You may still have a mortgage, a credit card, a car payment, maybe investments through a financial institution. But emotionally, something shifts. The bank is no longer the adult in the room. It is no longer the place you run to every time life hits hard. It becomes a service, a tool, useful, but not sacred. And that is a quiet form of independence, not the kind people brag about online, not the kind that buys a sports car or posts a screenshot, the real kind. The kind where a bill comes in and your heart rate does not spike the same way. The kind where you can sleep without mentally calculating whether the next paycheck will arrive before the next draft. The kind where you can tell your grown child, "I can help a little," without destroying your own month. The kind where you can replace tires before they become dangerous, go to the dentist before the pain gets worse, or turn down overtime because your body is telling you it needs rest. That is not glamorous, but for many people, that is wealth in its first honest form. And this is why $10,000 matters more than the number suggests. It is not enough to retire on. It is not enough to stop working. It is not enough to solve every problem, but it is enough to change the way problems enter your life. Before $10,000, a problem walks in like an intruder. After $10,000, it still walks in, but it does not own the house. The second thing $10,000 does is it changes your relationship with debt. Not because debt disappears, but because debt stops looking like the only door in the hallway. And that matters. Because for a lot of people, especially after 40, debt did not arrive all at once. It came in pieces. A car payment that made sense at the time. A credit card balance that was supposed to be paid off next month. A home repair that could not wait. A medical bill. A helping hand for someone in the family. A vacation you told yourself you deserved because you were exhausted. None of it felt reckless in the moment. It felt human. And that is the dangerous part. Most people do not fall into financial pressure because they are foolish. They fall into it because life keeps asking for money before they have had time to recover from the last thing life asked for. Banks understand this rhythm. They know that pressure creates customers. A person under pressure asks different questions. They do not ask, "What is the total cost?" They ask, "Can I afford the payment?" And those are two very different questions. One question protects your future. The other question only protects your Friday. When you have no savings, the monthly payment becomes the language of survival. $29 a month, $89 a month, $240 a month. It all sounds manageable because the full number is hidden behind smaller numbers. But small numbers can still form a cage. One bar at a time, one payment at a time, one automatic withdrawal at a time. And before long, a person with a decent income can feel broke before the month even begins. That is the quiet trap. Not poverty in the obvious sense, not failure in the dramatic sense, but a life where your paycheck keeps arriving already spoken for. $10,000 saved gives you the ability to step back and see the whole cage. You begin to ask better questions. Not, "Can I make the payment?" but, "Do I want this obligation following me for the next 5 years?" Not, "Can I get approved?" but, "Why am I so eager to owe someone money?" Not, "What is the minimum?" but, "What is this really costing me in freedom, sleep, and options?" Those questions are uncomfortable, but they are the questions that separate a consumer from an owner of his own life. And banks do not fear your savings because $10,000 is a fortune. They fear what it awakens. A person with a little cash starts noticing how much of modern life is built to keep them slightly obligated. A phone that must be financed. A couch that must be financed. A car that must be financed. A vacation that must be financed. Even peace of mind gets packaged into a payment plan. And again, I am not saying every loan is bad. A mortgage can help a family build stability. A business loan can help someone grow. A reasonable car loan might be necessary in a country where reliable transportation keeps food on the table. But there is a difference between borrowing from strength and borrowing from fear. That difference is everything. When you borrow from strength, you have options. You can walk away, you can negotiate, you can wait. When you borrow from fear, the lender is not just offering money, they are selling you relief. And relief is one of the easiest things in the world to overpay for. $10,000 puts a little distance between you and fear. Not enough to make you careless, enough to make you deliberate. And for Americans over 40, that distance can feel almost strange at first, because many people have spent decades associating money with pressure. Payday does not feel like progress. It feels like catching up. Tax season does not feel like planning. It feels like bracing. Retirement statements do not feel like hope. They feel like a quiet accusation. And when you finally build a cushion, part of you may not even trust it. You may look at that balance and think, something is going to happen, because something always has. But that is exactly why the cushion matters. It is not there because life will stop happening. It is there because life will keep happening. The goal is not to build a world where nothing breaks. That world does not exist. The goal is to become the kind of person who does not break every time something else does. That is a very different kind of financial strength. It is not loud. It does not need applause. It just sits there in the background like a locked door behind you. And because that door is there, you walk differently. You may still use credit cards, but you stop carrying balances like they are normal. You may still finance something, but you read the terms instead of staring only at the payment. You may still want nice things, but you no longer confuse a purchase with proof that you are doing well. That last part is important, because banks do not only profit from emergencies, they profit from identity. They profit when people use borrowed money to feel successful before they have built the foundation to support it. And after 40, this can hit harder. You may look around and feel like you should be further along. Friends have bigger homes. Co-workers drive newer trucks. Neighbors remodel kitchens. People online seem to retire early, travel constantly, and always know the perfect investment at the perfect time. So you borrow, not always because you need the thing, but because you are tired of feeling behind. $10,000 saved does not erase that feeling, but it gives you a small place to stand while you question it. And sometimes that is the beginning of real maturity with money. Not denying yourself everything, not living in fear, but refusing to let insecurity sign contracts on your behalf. Because that is what happens more often than people admit. Insecurity signs the car loan. Exhaustion signs the credit card receipt. Pride signs the home equity line. Loneliness signs the expensive vacation. And later your income has to live with the paperwork. A person with savings is not immune to this. But he is harder to rush, harder to flatter, harder to scare. And in the financial world, a customer who cannot be rushed, flattered, or scared is not the most profitable customer. He is still valuable, but he is not easy. $10,000 is where many people first become not easy. And that may be the real reason the number feels bigger than it looks. It is not the end of the journey. It is the first time you realize the journey does not have to be controlled by panic. There is another reason $10,000 changes a person. It teaches you the difference between access and ownership. And that difference is easy to miss in America because so much of modern life is designed to make access feel like ownership. You can drive a car you barely own. You can live in a house where the bank owns most of the walls. You can wear clothes bought with money that has not been earned yet. You can eat dinner, take a trip, replace furniture, upgrade a phone, and feel like life is moving forward, when really your future income is being quietly claimed before it arrives. That is not always a moral failure. Sometimes it is just how the system is built. But once you save $10,000, you begin to see the difference. You begin to notice that having access to something is not the same as being secure. Approval is not wealth. A high credit limit is not a raise. A new payment plan is not progress. A low monthly payment can still be a very expensive sentence. And when that becomes clear, a strange thing happens. You stop being impressed by the same things. Not because you become bitter, not because you judge people, but because you can see the wires behind the stage. You can see how many people are performing stability while quietly negotiating with anxiety every night. You can see how many nice lifestyles are actually just fragile arrangements with lenders. And maybe, if you are honest, you can see where you have done the same thing too. Most of us have. We bought something to feel settled. We upgraded something to feel respected. We said yes to something because saying no made us feel small. And banks do not need you to be foolish for that to happen. They only need you to be human. They only need you to want relief, comfort, dignity, convenience, or a little proof that all your work has meant something. After 40, that desire can become powerful, because you have worked too long to feel like you are still waiting for permission to breathe. You want the nicer truck, you want the remodeled kitchen, you want the vacation with your spouse, you want to help your children, you want to stop saying, maybe next year. And there is nothing wrong with wanting. Wanting is not the problem. The problem is when every want has to be processed through debt before it becomes real. The problem is when the bank becomes the translator between your desires and your life. $10,000 does not remove desire, but it gives you one important thing before desire makes a decision. It gives you friction, a pause, a moment where you can ask, is this what I actually want, or is this what I want because I am tired? That question can save more money than any coupon, any budgeting app, any clever trick, because tired people overspend differently. They do not always overspend because they are careless. They overspend because they want one area of life to feel easy. They want one button that says, you have earned this. They want one room, one driveway, one weekend, one meal, one package at the door that says, you are not just working and aging and paying bills, you are living. That is deeply human. But it can also become expensive if nobody ever taught you how to enjoy life without handing your future to a lender. A person with $10,000 saved begins to rebuild that muscle. He learns that money sitting still is not wasted. That is hard in a culture that tells you every dollar must be moving, spending, upgrading, producing, proving something. But sometimes money sitting still is doing its most important work. It is standing guard. It is keeping one bad day from becoming 6 bad months. It is protecting your ability to make decisions with a clear head. It is protecting your marriage from arguments that are really about fear. It is protecting your health from stress that has nowhere to go. It is protecting your future self from the consequences of your exhausted self. And that is where banking psychology becomes important. Banks make money when your money moves in certain directions. Interest, fees, refinancing, revolving balances, overdrafts, products, upgrades, penalties, convenience charges. Movement creates revenue. Stillness does not always create as much. A dollar you keep as a cushion is a dollar that is not paying interest to someone else. A dollar you use to avoid a loan is a dollar that never enters somebody else's profit model. A dollar that lets you wait is a dollar that weakens the power of urgency. And urgency is one of the most profitable emotions in the economy. Think about that for a moment. Urgency sells fast loans. Urgency sells extended warranties. Urgency sells bad car deals. Urgency sells high-interest credit cards. Urgency sells limited time offers you would have ignored if you had slept on it. Urgency sells the feeling that you are about to miss your chance. But a person with $10,000 saved can sleep on it. Not always. Not with every problem. But more often than before. And more often is enough to change the pattern. You do not need to become perfect with money. Perfect is not real. You just need to become less available to panic, less available to shame, less available to sales pressure disguised as opportunity. That is where financial adulthood begins to feel different. It is not about knowing every investment term. It is not about sounding smart at dinner. It is about becoming less easy to separate from your money. And the older you get, the more valuable that becomes. Because after 40, your money has less time to recover from decisions made in a hurry. At 25, you can make a mess and still have decades to clean it up. At 45, 55, 62, the mistakes become heavier. Not impossible to recover from, but heavier. A bad loan can delay retirement. A car payment can steal investment money. A home equity line can turn a house into an ATM until one day the house feels less like shelter and more like collateral. $10,000 saved is not enough to protect you from every mistake, but it can protect you from the habit of treating every problem as something to finance. And that habit is where many people lose control. They do not lose control because of one dramatic collapse. They lose control because every small inconvenience becomes a balance. Every balance becomes a payment. Every payment becomes normal, and normal becomes a life that is always slightly owned by someone else. When you have $10,000, you begin to taste the opposite. You taste what it feels like to own a little more of your own tomorrow. And once you taste that, the old version of normal starts to feel expensive. Not just financially expensive, emotionally expensive. Spiritually heavy, even if you never use that word. Because debt does not only charge interest on money, sometimes it charges interest on your attention. It sits in the back of your mind during dinner. It follows you into bed. It makes every workday feel mandatory in a way that drains the dignity out of it. It makes you afraid of change. Afraid of losing a job you do not even like. Afraid of getting sick. Afraid of disappointing people. Afraid of opening mail. $10,000 does not eliminate fear, but it lowers the volume. And when the volume goes down, you can finally hear your own judgment again. That is what banks quietly fear. Not your $10,000. Your judgment returning. There is a point where saving $10,000 stops being about discipline and starts being about identity. At first, you save because you are trying to protect yourself. You cut back a little. You say no to a few things. You stop treating every raise like permission to spend more. You look at your account more often. You start noticing where the leaks are. But after a while, something deeper happens. You begin to see yourself differently. You are no longer the person who always has to recover. You are no longer the person who hopes nothing breaks before Friday. You are no longer the person who walks into a bank or a dealership or a store already feeling like the weaker side of the conversation. That shift is quiet, but it is powerful, because the financial world does not only work with numbers, it works with behavior. And behavior comes from how a person sees himself. A person who feels trapped behaves differently than a person who feels prepared. A trapped person accepts worse terms. A prepared person asks one more question. A trapped person signs faster. A prepared person takes the paperwork home. A trapped person feels grateful just to be approved. A prepared person remembers that approval is not the same thing as a good decision. That is a completely different customer. And banks know it. They know the customer who has no cushion often walks in carrying pressure. The customer who has $10,000 walks in carrying options. Maybe not unlimited options, but enough options to change the tone of the room. And this is where many people misunderstand money. They think the first goal is to become rich. But for most people, the first goal is to stop being financially cornered. There is a difference. Rich is far away for many families. Not impossible, but far. Not being cornered can begin much sooner. It can begin with 1 month of expenses saved, then 2, then 3. It can begin with money that is not exciting, not invested in something flashy, not talked about at a barbecue, not shown to anyone. Just sitting there, quietly making you less desperate. That kind of money does not impress strangers, but it changes the way you answer the phone. It changes the way you sleep. It changes the way you think about your job. It changes the way you look at a bill. And after 40, those changes matter more than most people admit. Because at this stage of life, you are not just managing money. You are managing energy. You are managing years. You are managing the weight of past decisions and the narrowing window of future ones. You cannot afford to keep living as if every mistake is just a lesson with no cost. Some lessons arrive with interest. Some lessons take 10 years to pay off. Some lessons show up disguised as a payment you barely notice until you realize it has been following you through 3 birthdays, 2 tax seasons, and 1,000 ordinary mornings. $10,000 saved helps you stop creating so many of those lessons. It gives you the dignity of not needing to turn every surprise into a contract. It gives you the ability to absorb a hit without letting that hit become your new identity. And that is important, because debt has a way of making people shrink. Not visibly, not at first, but slowly. You stop dreaming in full sentences. You start thinking only in payments. You stop asking, what do I want my life to look like in 10 years? And you start asking, how do I get through this month without falling behind? And once your mind gets trained to think that small, it can be hard to stretch it again. Savings stretches it. Not because $10,000 solves everything, but because it gives your mind proof that a different pattern is possible. You can keep money. You can build a buffer. You can say no and survive the discomfort. You can delay a purchase and still be a person of value. You can let a desire pass through you without obeying it. That last one is a skill many people were never taught. We were taught how to earn. Maybe. We were taught how to buy. Definitely. We were taught how to finance. Constantly. But very few people were taught how to let wanting exist without immediately feeding it. And yet that may be one of the most important financial skills of adulthood. To want the better car and not buy it yet. To want the trip and plan for it instead of charging it. To want to help everybody and still protect your own foundation. To want a beautiful life without letting every beautiful thing become a bill. That is not deprivation. That is self-respect with a calendar. And banks are not built to encourage that kind of waiting. The economy around you is not built to encourage it either. Everything is instant. Everything is available. Everything can be broken into payments. The message is simple. You can have it now, and your future self can deal with it later. But after 40, your future self is not some distant stranger. Your future self is right there. He is closer than he used to be. He is the one who will either thank you for the cushion or quietly resent you for the payments. He is the one who will either have choices or excuses. He is the one who will either look back and say, I finally started protecting myself, or I kept waiting for life to get easier before I changed. $10,000 is often the first serious conversation between you and that future self. It is not dramatic, it is not glamorous, but it is honest. It says, I may not be where I want to be, but I am no longer willing to be completely exposed. And that sentence, even if you never say it out loud, can become the beginning of a new financial life. Not a perfect life. Not a life where every investment wins or every decision is wise. A steadier life. A life where banks become tools instead of lifelines. A life where you borrow less from fear and make more decisions from strength. Because the real power of $10,000 is not that it gives you everything. It is that it reminds you what it feels like to not need everything immediately. And once you understand that, the world gets a little quieter. The offers get a little less seductive. The pressure loses some of its teeth. You still have bills. You still have responsibilities. You still have problems. But you also have a small wall between you and chaos. And for a man or woman who has spent years living without that wall, building it can feel like getting a piece of yourself back. One of the most uncomfortable truths about saving $10,000 is that it exposes the habits that used to hide behind emergencies. When you have nothing saved, almost every bad money decision has an explanation. The car broke down. Prices went up. The kids needed help. Work slowed down. Life got expensive. And many times those explanations are real. Life does hit hard. But when you finally build a cushion, you begin to notice something else. Not every leak in your financial life was caused by disaster. Some leaks were caused by patterns, small comforts, avoided conversations, purchases made to escape a feeling, subscriptions you stopped noticing, meals bought because you were tired, upgrades bought because you felt behind, gifts given because saying no felt cruel. And this is where the $10,000 becomes more than protection. It becomes a mirror. It shows you the difference between what life did to you and what you kept doing to yourself. That can be hard to look at. Nobody enjoys realizing they were not only a victim of rising costs, bad timing, or unfair systems. Sometimes we help the pressure stay alive, not because we were stupid, because we were tired, because we were human, because we wanted relief, because we did not want to feel like every year was just another year of cutting back. But money has a way of remembering what we try to forget. The bank account remembers every impulse. The credit card remembers every emotional purchase. The loan balance remembers every moment we chose speed over patience. $10,000 saved gives you enough distance to start reading that history without shame. And that part matters. Shame does not fix money. Shame usually makes money worse. Shame makes people hide. Shame makes people avoid statements. Shame makes people say, I'll deal with it later, until later becomes more expensive than today. What changes a person is not shame. It is clarity. Calm clarity. The kind that says, I can see what happened, I can see my part, and I can make the next decision differently. That is a quiet kind of power. And banks have a harder time profiting from people who can sit calmly with the truth. Because once you stop hiding from your own numbers, the whole game changes. You start seeing that financial peace is not built only by earning more. Earning more helps, of course, but a higher income without a calmer mind can become a faster way to stay broke. More money can simply create larger mistakes if the old patterns are still in charge. The $10,000 matters because it proves that you can interrupt the pattern. You can let money stay. You can keep it from turning into furniture, trips, gadgets, favors, or proof. You can allow a balance to sit there without feeling like it needs to perform. And that is not easy in a culture that keeps asking your money to prove your worth. But the older you get, the more you realize that some of the most important things money does are invisible. It keeps you from begging for approval. It keeps you from accepting every offer. It keeps you from turning one hard month into 2 hard years. It keeps you from needing applause. And maybe most importantly, it keeps you from confusing motion with progress. Because a lot of people are financially busy but not financially stronger. They move money around constantly. New cards, new loans, new balances, new transfers, new deals, new payments. It feels like activity. It feels like managing. But sometimes it is just rearranging the same pressure in a different room. $10,000 saved is boring on purpose. It does not entertain you. It does not flatter you. It does not make you look successful. It just waits. And in that waiting, it teaches patience. It teaches restraint. It teaches you that not every dollar needs a job that can be bragged about. Some dollars are there to protect the man or woman who earned them. Some dollars are there to stand between your family and panic. Some dollars are there so your future does not have to keep apologizing for your present. That is why this number can feel so emotional for people who finally reach it. It is not because $10,000 is enough. It is because it may be the first time in years they feel like they are not completely exposed. And once you feel that, you begin to understand why banks prefer customers who never quite get there. A customer with no cushion is often loyal out of necessity. A customer with savings is loyal only if the service is worth it. That is a different relationship. You are no longer asking the financial system to rescue you from every small fire. You are deciding when the system deserves your business. That does not mean you become arrogant. It means you become awake. And an awake customer notices the cost of convenience. He notices when a special offer benefits the lender more than the borrower. He notices when a reward program is just a decorated invitation to spend more. He notices when a payment is small because the term is long. He notices when the friendly language is hiding an expensive structure. That awareness may not make you rich overnight, but it can stop you from bleeding quietly for decades. And for someone over 40, stopping the bleeding is not a small thing. Sometimes the beginning of wealth is not a big investment. Sometimes it is simply the day you stop handing pieces of your future to everyone who makes the present feel easier. $10,000 is not the finish line. It is the first sturdy step. It is the point where you begin to say, not loudly, not proudly, but honestly, I am going to need my own life back. And from there, everything starts to change a little. The way you spend, the way you borrow, the way you wait, the way you look at a bank, a bill, a paycheck, and yourself. If you are still here with me this far into the video, I want to invite you to subscribe to the channel and stay with us every day. Because if this conversation has felt familiar, if you have lived long enough to know that money is not just math, but memory, pressure, pride, fear, and responsibility all mixed together, then this channel is being built for you. Not for people pretending life is simple. For people who have carried real bills, real setbacks, real choices, and still want to become wiser with what they have left. Now let's come back to the real point, because $10,000 saved is not the victory most people think it is. It is not the moment you relax forever. It is the moment you finally have to decide what kind of person you are going to become with money. Because once the panic gets quieter, responsibility gets louder. That is the part nobody tells you. When you are broke, you can blame the emergency. When you have a cushion, you have to start building a system. And that system is what separates a person who saves $10,000 once from a person who never goes back to living exposed. The bank may not fear your $10,000, but it does fear the habits that allowed you to keep it. It fears the habit of waiting, the habit of comparing, the habit of not needing approval, the habit of letting an offer pass without feeling like you missed your only chance. Those habits are far more dangerous than the money itself. Because $10,000 can disappear. One repair, one medical bill, one family crisis, one bad decision, and the number can shrink fast. But the person who learned how to build it can build again. That is the real asset. Not the balance, the builder. And after 40, this becomes even more important because you begin to understand that time is not as cheap as it used to be. You cannot keep restarting forever without cost. You cannot keep saying, "I'll get serious next year," as if next year always arrives empty and waiting. Next year usually arrives with its own problems, its own prices, its own surprises. So the question becomes very simple, but not easy. What do you do once you finally have a little room? Do you protect it? Or do you prove something with it? Many people reach their first real cushion and immediately feel pressure to reward themselves. And I understand that. You save, you sacrifice, you watch the balance grow, and some part of you says, "I deserve to feel something from this." You want the money to become visible, a trip, a car, a new room, a gift, a sign that the discipline was worth it. But sometimes the reward is not spending the money. Sometimes the reward is becoming the kind of person who no longer needs to turn every success into consumption. That does not mean you never enjoy life. It means you stop confusing enjoyment with escape. You stop using purchases to prove that you are okay. You stop letting every little victory become the beginning of a new payment. That is a mature kind of freedom. Quiet freedom. The kind that does not ask for witnesses. And this is where banks lose some of their grip, because a mature saver is harder to predict. He may still use a credit card, but not as a crutch. He may still take a loan, but not because he is cornered. He may still spend, but not to repair his self-worth. He may still want nice things, but he can let wanting breathe for a while before turning it into a bill. That pause is everything. The pause is where you stop being a reaction and start becoming a decision. And when enough people learn that pause, the financial system has to treat them differently. Not because the system suddenly becomes kinder, but because informed people are harder to drain. A person with savings and patience does not need the same products. He does not pay the same penalties. He does not fall for the same urgency. He does not accept the same terms just because someone says, "This deal ends today." He understands that most urgent offers are only urgent for the person trying to sell them. And that knowledge alone can save a person thousands over a lifetime. But there is another layer here. $10,000 also changes the way you see work. When you have nothing saved, every paycheck feels like oxygen. You may stay in a job that breaks you because leaving feels impossible. You may accept disrespect because the mortgage is waiting. You may work overtime you do not have the energy for because one missed check would hurt too much. But when you have a cushion, even a modest one, work becomes slightly less terrifying. You still need income. Of course you do. But you are not standing on the edge in the same way. You can think. You can plan. You can update your skills. You can look for a better opportunity without feeling like one bad week will ruin you. That does not sound revolutionary until you have lived without it. Then it feels like dignity. And dignity is one of the most underrated financial goals in the world. People talk about net worth, retirement accounts, credit scores, investment returns, all of that matters. But dignity matters too. The dignity of not being easily pushed. The dignity of not begging a lender to solve every problem. The dignity of not turning your future into collateral every time the present becomes uncomfortable. $10,000 is not a mansion. It is not early retirement. It is not financial independence. But for many people, it is the first time dignity has had a number attached to it. And once you understand that, you stop treating savings like dead money. You understand it is alive in a different way. It is not growing loudly. It is protecting quietly. It is buying you patience. It is buying you sleep. It is buying you the right to make fewer desperate decisions. And maybe that is why this number bothers the system more than people realize. Because desperate decisions are profitable. Calm decisions are less profitable. And a person with $10,000 saved is not perfectly calm, but he is calmer than he used to be. That is enough to begin. So when people say, "Why would banks fear someone with $10,000 saved?" The real answer is not because $10,000 is a lot of money. It is because $10,000 can change the way a person walks through the world. It can turn panic into patience. It can turn approval into a choice instead of a need. It can turn a customer who reacts into a person who thinks. And once a person starts thinking clearly about money, many expensive things lose their shine. The fast loan looks different. The low monthly payment sounds different. The limited time offer feels different. The credit card reward starts to look smaller than the interest behind it. The new car smell does not smell quite as sweet when you can see 5 years of payments sitting behind the steering wheel. And that is not cynicism. That is maturity. It is what happens when you stop looking at money only as something to spend and start seeing it as something that protects the life you are trying to keep. $10,000 will not make you rich. It will not erase inflation. It will not fix the cost of housing, healthcare, insurance, groceries, or retirement. It will not undo old mistakes. It will not make every decision easy. But it can create a small island of control in a world that constantly tries to pull control away from you. And sometimes, that small island is where a person begins again. Not with a speech, not with a big announcement, just with a quiet decision to stop living completely exposed. Because the truth is, a lot of financial pain does not come from one terrible choice. It comes from having no buffer between you and life, no buffer between you and the mechanic, no buffer between you and the doctor, no buffer between you and the bank, no buffer between you and your own tired impulses. And when there is no buffer, everything gets louder. Every bill sounds like a threat. Every delay feels personal. Every emergency becomes proof that you cannot get ahead. But when you have that cushion, even a modest one, life still speaks loudly sometimes. But it no longer gets the final word every time. That is the difference. And maybe that is what this whole conversation has really been about. Not banks, not $10,000, not even savings. It is about the moment a person decides they are tired of being easy to pressure, tired of being rushed, tired of being sold relief at a price that keeps rising, tired of making decisions from fear and then calling them normal. At some point, you have to look at your money and ask a question most people avoid. Is my life being built or is it only being financed? That question can be uncomfortable, but it can also be the beginning of a steadier life. A life where the bank still exists, but it no longer sits at the center of every problem. A life where debt may still have a place, but fear no longer chooses it for you. A life where saving is not punishment. It is protection. It is self-respect. It is a quiet promise to the older version of yourself who will one day need the decisions you are making right now. And if you are over 40, that older version of you is not far away. He is close. She is close. Close enough to feel the consequences. Close enough to thank you. Close enough to ask why you waited. So do not look at $10,000 as some magical number. Look at it as a line in the ground. Below that line, life can push you around too easily. Above that line, you start pushing back, calmly, privately, without needing anyone to clap for you. And if you already have it saved, protect the habits that built it. If you do not have it yet, do not let shame speak louder than your next step. Start with what you can. Keep what you can. Learn what keeps pulling it away from you. Then build again. Because the goal is not to impress the bank. The goal is to stop needing the bank every time life gets heavy. That is where real change begins. If this video gave you something to think about, follow the channel and share it with 5 people who might need to hear it before they sign another loan, carry another balance, or spend money just to feel caught up. Leave a sincere comment below and tell me where you are in this journey. Are you trying to build your first 10,000? Are you protecting it? Did you have it once and lose it? And tell me what topic you want us to talk about next. Because money is not just numbers on a screen. It is the story of what you tolerated, what you learned, what you changed, and what you finally decided would not own you anymore. And sometimes, the most powerful thing in your financial life is not the money you make. It is the money you refuse to hand away.